Hi there. I'm Sarah Biller, the co-founder of the FinTech Sandbox and the executive director of Vantage Ventures. It's really my pleasure today to welcome you to the FinTech Sandbox Demo Day 7.0, as well as a series of virtual talks that will follow Demo Day throughout the week. And I can't think of a better time to welcome you in to see entrepreneurs and hear from visionaries. We certainly know the world needs it. If we think about leaders and their characteristics, and the same vein, the characteristics of entrepreneurs, we think about what we need today. We need brains, soul, we need heart, and we definitely need nerves of steel. And it's my pleasure to welcome you to a fireside chat with very seasoned financial services executives and leaders who embody these traits. We're going to hear shortly from Secretary Mike Kennealy. He heads the Housing and Economic Development Authority for the Commonwealth of Massachusetts. And it's our pleasure to also welcome back to our discussion Mike Fanning, the head of MassMutual U.S., for a discussion on what it means to locally drive FinTech innovation in a community like Boston. So thank you, Mike and Mike. We're super happy to have you. And now to your remarks.
The global economy runs on financial transactions, and this industry has the power to bring economic opportunity to more and more people here and around the world. It will do so by solving complex challenges. We are seeing industry step up, including the business leaders joining us today. They are the co-chairs of FinTech Working Group, connecting organizations and individuals to drive innovation in the financial services. After our conversation, you will be the first to see some of that innovation with the FinTech Sandbox Demo Day. My first question is for Mike Fanning of MassMutual. Mike, insurance is one of the oldest businesses, yet one that is transforming rapidly. What are some of the biggest challenges facing your industry?
Thank you, Janet. It's a great question, and you're right. Insurance is a really old business. And we've been around a long time. So the list of challenges is really long, and particularly for a business like ours, where we've got clients that are with us for generations. And literally our oldest policy owner is over age 100 and has been with us for over 90 years. So the list is really long, but it's the usual kind of list of things for a lot of companies, whether it's cybersecurity threats, ability to really leverage and use quality data. Given the fact that some of our systems are so old. We were an early adopter of technology, and we had our first computer in 1960, and we still have a lot of policies that are running on some of these older platforms, and they're just incredibly inefficient. And in a digital world, they just don't present themselves really well. So, I think that the single biggest challenge we have, though, is that we have a really diverse customer base, like I mentioned, whether it's age, gender, business owners, that type of thing. And, we all know in today's world that, they want service and they want interaction delivered on their terms. So whether that's in person, whether it's online, it might be at the workplace, it might be over the phone. So, we've got to be pretty nimble in how we actually integrate with them. And I think that the single biggest challenge the industry's had is around creating an experience, because insurance companies aren't the ones that are setting the bar on the experience that consumers want. And, we've been investing in digital, evolution for several years, starting with a very robust data science program. And we've really, started this before the pandemic actually even started, but it continues to play a really critical part to our future in terms of how we're able to respond to customers, particularly during a time like this.
Secretary Kennealy, we know that the financial services sector is a major engine of the Massachusetts economy, employing 160,000 people. Right. Why has the governor declared FinTech a priority for the Commonwealth?
Well, it's a great question. There's a couple of things. One is we want to stake out leadership positions in sectors of the innovation economy where we feel like we have some natural competitive advantages. And so you highlighted our strength in financial services. That's been true for a very long time. Thanks in large part to great companies like MassMutual. We've got so many great homegrown companies here in Massachusetts that have been serving their customers and innovating for a very long time. So we are a leader in financial services and have been that way for quite some time. We're also a leader in technology. And so we thought, we want to be on the cutting edge. We want to figure out sectors of the innovation economy where we can and should lead. And so fintech was a natural one for us to look to based on our legacy strengths, both in financial services and information technology.
So Mike Fanning, I asked you about the challenges facing the industry. What is MassMutual as a company doing to drive innovation in financial services?
Well, we're doing a number of things. So not only do we partner with some of the biggest accelerators and innovation leaders in the Commonwealth, and so firms like Mass Challenge, which is an incubator that's been based here, just had its 10th anniversary, or the FinTech Sandbox, of which I've recently joined the advisory board. So we do a number of those types of things. But in addition to that, the firm has a ventures arm, and the ventures arm is a return-seeking organization. So it's MassMutual Ventures. But we really formed it, and we've actually seeded the oversight board, which I'm involved with other business leaders, because we felt that as innovative as we thought we were as a company, and I believe innovation starts with our people. There's 7 billion people in the world, and there's a lot of entrepreneurs that are out there starting businesses. And we wanted to be sure we had a view of what was happening, not just within our four walls, but clearly around the globe. So, we've got a portfolio of companies mostly focused in the fintech and cyberspace, and we've been kind of working through that for quite a period of time. I think that the second thing that we've done is making sure that we're making the right investments. So we've got a pretty big portfolio to make investments out of, but we've done some things I would say internally, and done some startups. One called Haven Life that really has now built for us a digital end-to-end insurance platform. We think one of the first, if not the first, in the industry. So, and that really started out with a group of data scientists and our cybersecurity team and other technical experts really kind of coming together to kind of reimagine what insurance could be. So, we've done a number of those things, and and I think maybe the last one is, again, we've got 7,000 people, so we don't. Our view is we don't have an innovation department at the company, right? We think innovation starts with our 7,000 associates that wake up wanting to serve our customers and hopefully future customers better than we do today.
Well, I want to point out that you support innovation in all ways, your work with FinTech Sandbox, but also you invited Mass Challenge to take over some office space in your upcoming Boston Tower. So that's impressive. You'll be actually seated right next to innovation.
Yeah.
Secretary Kennealy, the pandemic, as we know, has brought about a financial crisis. What role can FinTech play in easing this crisis?
I think it's a few things, Janet. One is the way we're going to grow our economy, the way we're going to recover is through innovation in a lot of ways. And so we want to be in the forefront of innovation. And so I think you're going to see a number of fintech firms here in Massachusetts grow and add jobs and prosper and get us back on a path for economic recovery among other sectors of the innovation economy. So that's one thing. But I think also what the pandemic has shown is that there's a real desire on the part of the consumer to be able to access services anywhere. The idea that you can have access anytime, anywhere, any place to what you want to participate in, I think it's a really important part of this new economy. People will want to do a lot more things remotely and in a contactless way. You're seeing now, for example, touchless payment systems being utilized both clearly in the private economy, but also across the public sector in some of our towns and Massport and the MBTA and other areas. So I think as a driver of growth, fintech will be critically important. I think in satisfying the demand of the consumer for doing things in a remote, touchless way will be another. And I think also making the customer experience, the physical customer experience safer through some of this contactless technology, I think that'll play a role as well.
And Secretary, could I follow up by asking you this importance that's coming from the government side with this public and private partnership that you want to establish?
It's really, it's absolutely kind of the playbook here in Massachusetts. It's figure out what you want to lead in and assemble a team to get after it in a public-private way. Let me say a couple of things. You think about the fintech ecosystem here. We have great established financial services companies like MassMutual. We've got a number of startups. We have venture capital. We have a great pool of talent. We have an active, engaged partner in government that wants this stuff to happen. We have great research universities. That's the beginning. That's the foundation. of a leadership position in an innovation economy cluster. And we're so fortunate to have those things here. And the examples that coming back to MassMutual, the way they've been engaged with Mass Challenge and other players and really engaging with startups, that's fantastic. I mean, we need that. That's how we all collaborate. But on the broader theme of partnership, it really is how we try to get things done here. We call the recent economic development plan Partnerships for Growth. And we picked that title because it does encapsulate how we think about getting things done here in partnership. And the partnership between business, academia, and government has been a long part of our playbook for a long time. You look at other sectors we've been active in, whether it's life sciences, digital health, other areas of the economy. Advanced manufacturing is a great example. It really is how we get things done.
So speaking of partnerships and getting things done, I want to ask the both of you now about the FinTech Working Group, because you are co-leading this group.
Yes.
And it's fascinating. So let me ask Mike Fanning, can you share with us some of what has been happening in this group?
Sure, love to. And again, I can't tell you how important it has been to have the secretary be part of this group and co-chair this group with me. I think, when I think about why this is so important and why it will work, is the fact that we've got, dedicated people in government that are willing to not just show up to meetings, but roll up their sleeves and get to work on something like this. So it's been, truly a breath of fresh air. So, the FinTech Working Group, we took 24 leaders from around the industry, academic, venture capital, accelerator, startups, and clearly the state to come together to, create what I would consider to be the most robust and collaborative ecosystem for FinTech in the world, and do it right in Massachusetts. So that was kind of our moonshot, is really kind of where we were, what we were trying to actually get done. And, we've actually gone out and really created, I would say, 5 work streams around those types of things. So, access to capital in capital, which is fungible around the globe, but we know creating a great, strong ecosystem is going to require local venture capitalists to be involved. We clearly got the startup and corporate collaboration teams together. So that was the second big work stream. So making sure that as a startup was coming in, whether it was a direct-to-consumer type startup, but a lot of the FinTech work has been around corporate and solving big, difficult corporate problems. So having that collaboration in place. The third was around talent, education, and diversity, and making sure that if you're going to start a business here, that you've got the talent and the teams and clearly the diversity you need to be successful in the business world today. Policy and regulation was the fourth. Again, we are a very, very heavily regulated industry, and for all the right reasons, but making sure we've got the right policies and regulation in the state to make this a fertile place to be successful. And then finally, making sure that we get out and market, that we've got to, develop this ecosystem, bring it together, and brand it so, people know we're open for business.
So I'm going to ask Secretary Kennealy, you are going about this in a very thorough way.
Yeah.
And one step you did is that you hired EY to do a major study to assess where you are now in the industry,
Right.
because it's considered young industry, and where you need to go. The study is not yet released, but can you share with us, Secretary, some of the most compelling findings?
I will. First, I want to echo Mike's comments on the working group. It is a terrific group of people, and it's 24 people from all different disciplines, and it's really what you need to get those people in a room or a virtual room and collaborate and exchange ideas. I mean, it's a real honor to co-chair this group with Mike, and it's such a great group of folks, and I know we're making good progress. The E&Y study was interesting. So it showed that we have 350 FinTech startups headquartered in the state. Massachusetts firms represented about 9% of new FinTech startups last year. Global FinTech investment has increased dramatically. And it did touch on some of the areas around how COVID-19 will impact the growth of FinTech generally. So it told us a lot about the cluster. We got a lot to work with here, and it will help us develop and inform some of these strategies. The 5 work streams Mike mentioned is really core to the work around capital and startups and talent and policy and branding. So it's a really important report. And I think we have some, got a good start on the work now.
Mike, if I could ask you, I know that you have some numbers about how large global fintech investment is and how fast it's increased.
Yeah, Liz, I think the secretary touched on a little bit of it, but I think in the past 10 years, we've seen it grow from about 8 billion, so back in 2010, to over $100 billion in 2019. So it is a big growing sector, and maybe one of the sectors, as we talked about before, insurance is old, and it's a difficult business to break into, but clearly I think we've seen a lot of interest in startups to really kind of come into the space, and it's evidenced by kind of that just dramatic growth.
So Secretary, taking us back into the room where it happens, as you are the 24 business leaders sitting together and discussing this, are you fairly confident that Massachusetts really can be the hub for fintech development as we move forward? I know that we own a lot of industries, other industries, biotech and the financial services. Do you think that this is something that our area will really end up being dominant in?
Oh, absolutely. And I'd say that for a couple of reasons. One, we do have some incredibly important natural competitive advantages around talent and industry strengths, both in technology and financial services. We do have an incredible ability to collaborate. And the fact that we get those 24 folks to work together with us in this and share their perspectives and their strengths, I think is a real strength of ours. And the other reason is that we've done this before. As I mentioned, there are other sectors of the economy we've been determined to lead in. And we've done it. So I'm very optimistic about our future in fintech. I do think one thing we maybe are not good at historically is marketing ourselves. Mm-hmm. And I'm glad to see branding as one of the elements in our strategic plan. So we have all these great attributes. We have to make sure they work together and build on each other. But also we got to tell our story, and that'll be a critical part of the work going forward.
So, Secretary, if marketing is one of the challenges, is there something else that you see that presents a challenge to this growth?
I think trying to unlock more capital, particularly at the local level, is one thing. There's a lot of capital here generally, but I think making providers of capital more aware of the opportunities, and frankly, not just in Boston, but all over the state. We always think regionally here in our administration. We're responsible for the entire state. So looking at ways we can grow the sector in a more regional basis is one. But no, I think it's, I think we have what we need. We got to develop the plan and get after it.
Well, Mike Fanning knows about growing the industry across the state because you're headquartered in Springfield, and yet you're building a gorgeous new building in the Seaport to have a very big campus there. I want to ask you, Mike Fanning, what you find working day to day in this industry. What do you see as most promising in the future for this industry?
Yeah, I think for our industry particularly, we come to work every day with a sole purpose of helping people secure their financial future and protect the ones they love. And for me, particularly coming through the pandemic, and I think I speak for our entire organization, from our board right down to every employee in the company, that is a passion of ours. And I think whether it's the need to protect yourself or your family from an early death, or now more importantly than ever, making sure, and particularly in a low interest rate environment that we're in, which is challenging for everybody, but particularly for savers, that some of the products and solutions that we have can truly make a difference in helping somebody build their retirement over time. So I think that focus and the growth for our industry is as good as it's ever been. And I think the other thing that's just really interesting, some data came out today that life insurance ownership in this country is at the lowest level it's been in 50 years. However, I think just given the kind of the times that we're in, people's mortality is probably as top of mind as ever. And the number of people likely to buy life insurance in the next couple of years has gone from something like 10% just a few years ago to up to 40 or 50%. So, we think it's now top of mind for people again.
And although this is not pleasant to think about, we have the global pandemic to deal with, and also just it feels an unprecedented number of other disasters and challenges around the world, be they weather related or things that we feel are random. And that is also something that creates a big challenge and pressure on the industry.
Yeah, without a doubt, whether it's, property and casualty or life insurance or really anything, that we deal with. Clearly, that becomes more and more challenging every single day. And I think, to the point, working with entrepreneurs and working with really creative people to solve some really difficult problems, maybe that we haven't really been faced with either ever or within the last few decades. I think we're going to have to deal with that, and I do think our ability to succeed as a company and as an industry, and I think the Commonwealth is all about innovation, and that's what this whole effort is all about.
So Secretary Kennealy, I asked Mike Fanning what he found from the industry perspective most promising for the fintech industry. So I want to ask you, from your seat in government, what are you also most optimistic about?
I think I'm going to get back to the theme of collaboration again. I mean, one of the really special things about this job is your ability to convene people and get people to work together on things. And I think going back to the elements of our ecosystem here, big companies, small companies, capital, universities, government partners. I mean, it's really special, and it's been working well for a long time here. So I'm very optimistic about that. I think that one thing I found is if we decide something is important to us as government, that can really help advance the dialogue and get things going. So we have declared that this is an important area for us. I hope that that'll be a catalyst I know it will, for a lot more work and a lot more collaboration.
Secretary Kennealy, you have some news to share with us.
Well, yes, we do have something to announce. And we've mentioned a couple times in this conversation about the importance of branding and the importance of government contributing capital and supporting these sectors. And so on behalf of the FinTech Working Group, I'm pleased to announce that in addition to our support for the E&Y study we talked about, the Commonwealth is making an additional $75,000 award to the Innovation Institute at the Mass Tech Collaborative to support increased engagement and branding for the mass fintech sector. So we made fintech one of our key innovation sectors, and we're going to back that up with some more capital to help on engagement and branding of that sector.
Gentlemen, thank you. And now you are going to get a glimpse of the future of fintech in Massachusetts and beyond with the FinTech Sandbox Demo Day. Sarah.
Hi, it's Sarah again, and I just want to transition us into a deeper discussion, but not without saying thanks to Mike and Mike for those marvelous remarks and reminding us of the commitment from the entrepreneurs all the way up to the levels of leadership in our governments and our industry. We certainly know that the future looks brighter because of you both. But it's also my distinct pleasure to transition from this discussion into one where I introduce my co-founder, David Jegen. He needs no introduction, but I will remind all of us that he embodies that soul and that heart and certainly that intellect that drove us to build the FinTech Sandbox. David, if I may ask you, and welcome you to the stage for this next part of our program.
Hello, my name is David Jegen, and I'm a co-founder of FinTech Sandbox and a partner with F Prime Capital. And I can't help but start by saying how much I miss seeing everyone today. You know, from, let's say, the very first meeting we had 7 years ago to brainstorm ideas that eventually became FinTech Sandbox. You know, this has always been about the people. And at the beginning, it was just a few of us, Sarah Biller, Ty Danko, Doug Nelson, Zach Sheffer, among others, were there to help conceptualize and work on making what FinTech Sandbox became. But over time, it grew into, over the 7,000 plus members that we have in the FinTech Sandbox community today. And Demo Day has always been a fantastic way to bring people together, and something that I've personally found special and love seeing friends and making new acquaintances. And though it is remote today, I at least feel there's some shared experience from that COVID-19 unites us in. It's different, but a special way. And I think highlighting the startups and hosting the week of FinTech talks is in some ways a celebration of what we have together and what we have built together despite the pandemic. So speaking of people, I have the duty today of saying goodbye to one member of our community and the privilege of welcoming another. Jean Donnelly, who most of you know, has been the executive director of FinTech Sandbox since our launch 6 years ago. And Jean has made contributions to just about everything in FinTech Sandbox. She has met and supported hundreds of founders. She's built critical relationships with dozens of data partners and financial institutions. And she's probably made more introductions to interesting people in the FinTech community than she could possibly count. If we were here together in person, I would offer a long and heavy round of applause for Jean. But wherever you are, Jean, sitting today, we thank you sincerely, all of us, and we thank you for everything you've done for FinTech Sandbox. But with that, I'm also excited that I get to officially welcome Kelly Fryer as our second executive director, and the person who will help us evolve and grow and become an even better organization over the coming years. I will confess that when we set out on the board to recruit our next executive director, Kelly was already at the top of our list of people we would love to work with and thought could be a wonderful addition to the organization. And Kelly was well known in the FinTech community, and many of you, I'm sure, have met or had the opportunity to work with Kelly before. We had seen her work as program director with Barclays Techstars, and we knew her very well-earned reputation with FinTech founders. She knows how to build a community, and she understands the financial services industry. And I have always felt she is natively founder-centric, true to the ethos of FinTech Sandbox. So I am personally so happy to have the chance to work with Kelly, and I can't wait to see her in action. And I hope all of you will feel the same and enjoy the coming years ahead. So with that, I will hand it over to you, Kelly, to kick off Demo Day and tell everybody what to expect.
So with that, we are very pleased to kick off Demo Day 7 with a bang. Please meet Keren Moynihan from Boss Insights. She was awarded Top 25 Executive Leaders in Lending. Boss Insights offers banks, credit unions, and private lenders business data as a service. They empower business lending and credit risk to bridge data gaps between lenders and their business clients by digitizing access to business customer information. The data platform accelerates all parts of the lending cycle: acquisition, lending decisions, onboarding, portfolio monitoring, cross-selling. They do it all. For banks and credit unions that want access to business customer information in real time, they can get started in just a day. Speaking with Keren is Nick Maynard from FinTech Sandbox partner Commonwealth. Commonwealth is a national nonprofit innovator that strengthens the financial opportunity and security of financially vulnerable people by discovering ideas, piloting solutions, and driving innovations to scale. Nick Maynard currently leads efforts at Commonwealth to scale proven solutions to address financial security, including as part of BlackRock's Emergency Savings Initiative. Deploying innovative savings interventions to low to moderate Americans through partnerships with employers, financial services firms, fintechs, and gig platforms. Take it away, Keren and Nick.
Keren, it's great to be here with you today. Boss Insights articulates its strength in your development of AI and an AI hub for particular enterprise and private lending use cases. How did you recognize the opportunity and that it wasn't just for small business lending, but for all types of business lending, including SBA and commercial?
Well, Nick, it's great to be here, specifically chatting with you and given all the incredible things you're doing with Commonwealth. To understand how we recognize the opportunity was not just for a small and medium business, but also for commercial. We have to look at our origin. We're really a tech meets fin story. It was Luke, our CTO, who scaled 3 companies, including Amazon, that saw that there was a technical need here, a technical need to have access to data in real time and give that to bankers so they could serve their business market. And he approached me, given that I was a commercial banker at the time. So banks, credit unions, and lenders, they look at things from a product perspective, and their products are loans, deposits, cash management. And it's good that they do that because they obsess on how to make those products the best they can be for businesses. But from a process perspective, we've all been there at a bank where you sit with so many documents and you have to sign things over and over and over again and send the same information over and over. Well, that's where a tech perspective really comes in. the tech meeting the fin. Because what we did was we looked at it from a user perspective, and the user in this case is the business. If you give them the most amount of data points to gather on them automatically, which is APIs, application programming interface, if you give them a pipeline to send their information just once and never have to send it again, you're giving them convenience. Then if you give the bank the ability to use that information for whenever they need it, the right data for the right purpose at the right time, they are happy because they don't have as much manual uplift. So that's what we did. We created a hub of pipes that you could turn on whenever you wanted to turn it on. Now, by expanding these APIs to have a large amount of accounting information rather than just the few that others provide in market, we could look not just at SMB, but also at commercial businesses as well, because we have the pipes to be able to serve them too. And by having access to other types of information beyond accounting, like payments for if you want to do cash flow lending, or HR if you want to do group solutions, or operations if you want to serve payments, we really are making it possible for the lender to proactively serve the business and delight them.
Streamlining the processing of Paycheck Protection Program loans turned out to be a significant opportunity for Boss Insights. Can you discuss how you responded to this program and how you will leverage that work going forward?
Yeah, absolutely. Again, great question. And we owe a huge debt of thanks to Oracle, who approached us asking us if we could prepare something for them. Here we had a 46-year-old established tech player that then partnered with a 2.5-year-old tech player in order to serve the market at a time of heightened need. When PPP hit, there was 15,000 lenders lending to businesses in 15,000 different ways. And we went immediately, in a matter of a few weeks, to 5,000 financial institutions. That's a third of the market, lending in one way. It was like a financial flash mob. So we had the access to the APIs or the pipes to gather all the information, and it was payroll information, not accounting in this case. Can you keep the economy moving was the question. So we didn't just have the ability to do what other vendors did, which is gather the documents, but we also had the ability to calculate based on that. And recently, there was a banker, Chris Nichols, who's the chief strategy officer at Center State Bank, who said that 67% of the PPP applications had to get returned. Can you imagine the uplift? But here we have a platform that does the calculations for the business borrowers, a group that is already challenged given the current state of the market. So that's what we did, and we did it with the hopes that we could leverage the market going forward to incentivize them to serve commercial businesses better in this digitized way.
And finally, what opportunities do you see in the space to address the needs of Main Street businesses and access for low to moderate income communities, as well as supporting low to moderate income small business owners?
Okay, that's a great question, especially given it's the Venn diagram of where Boss Insights and Commonwealth would meet, I would say. With AI, you have the need for more data, and you also have a way to tackle a huge problem that's been plaguing society for a while, and it's bias. The data is the Achilles heel of bias. If we're not trusting our traditional sources of information, which we know are flawed, if we're looking instead to the real-time information on the business, you can measure them on their merit. And that is what's most important to be able to do. Every day, there are 8,000 businesses walking into banks and credit unions and private lenders and fintech lenders and saying, please give me access to capital, and they're getting declined. And those same financial institutions don't have a way to serve them. But here with access to real data, we would have a way to serve them. And with being able to use the right data for the right purpose at the right time, financial institutions are in a position to capture the business lending market. For those who did so during PPP, they did see an uplift in their revenue earnings. And that helps the entire ecosystem, which is what we're here to do.
That's great. I've enjoyed our time together today.
Thanks so much.
As a reminder, you can live chat with all of today's startups via our Slack channel. Click on the upper right hand of your console to access it. You can also schedule follow-up calls with the companies too. Their booking links are right in the Slack. Now, to help digital asset firms and regulators achieve compliance and market integrity, lower operational costs, combat trade abuse, and protect investors, Solidus Labs offers a new crypto-native paradigm for compliance. A machine learning-powered customizable, and extensible compliance cloud that includes market surveillance, transaction monitoring, and integration into other elements of compliance, surfacing all relevant risk factors across various streams into a unified risk monitoring dashboard. Please meet Shen Arad, COO of Solidus Labs. With Shen is Fergal O'Leary, Senior Manager in the EY Business Consulting Practice, focusing on technology risk for the past 15 years. Fergal also leads the EY Boston FinTech Working Group, developing meaningful relationships with aspiring entrepreneurs across New England. Here is Solidus Labs.
Jen, I'm thrilled that we have this opportunity to chat about your wonderful company. And let me point out that it is really encouraging for EY as a confident sponsor to get involved during FinTech Talk Weeks. We are a huge supporter of the Sandbox and all of the wonderful professionals that work there. This is a terrific opportunity for the ecosystem to hear more about Solidus Labs. And after that terrific introduction, maybe you could expand a little bit more on how your journey started with this company and what it means for you to be involved with FinTech Talks.
Absolutely. Thank you very much. Our story, it really is a pleasure to be here. Our story is that we're a bunch of former Goldman Sachs veterans and some other big banks. We looked at crypto in 2017 and saw a market full of potential, but with major challenges. And when we tried to understand where we can add value, compliance was clearly one of those points because of our more than 20 years of experience working with regulators and making adjustments to traditional financial systems. We knew very early on that this is not a one company job. And that's where the question of communities like FinTech Sandbox and events like the Boston FinTech Week became very, very powerful. And we are thankful for any opportunity to engage with other entrepreneurs and industry veterans and experts like yourself to promote our goal, which is to advance market integrity in digital asset markets through better compliance tools.
Fantastic. And I wanted to get right into some of our questions here that I have. Like, how extensive is market manipulation in your perspective?
So first of all, just to be clear, we're focusing on crypto markets in this case when we're talking about market manipulation. And the answer is that those markets are rife with market manipulation and other forms of abuse. Consistently studies show that as much as 95% of crypto trading volume is potentially manipulated. We have data that shows that only 5 to 10% of trading platforms actually currently use automated, specialized risk monitoring systems. The result is that there's a lot of money that's being swindled out of investors, and regulators are very concerned. That's where, of course, the question of a Bitcoin ETF comes in, where the regulator repeatedly says that it would require, the industry would need to deal with manipulation before there's any question of it being proved. So these are just a few quick notes on that. The bottom line, there's a lot of it. And in order to address it, there's need for more risk monitoring solutions that are tailored for the space.
And what are your personal thoughts on let's say, the pace of how regulators are performing in various jurisdictions? Because that ultimately is a hot topic over the last few years in terms of what are you actually complying with?
Of course. So we are fortunate, in my view, to be right in the middle. We work with the industry and with private companies, and we also work with regulators. It was clear to us that just like it's not a one company job to solve this issue, regulators have to be involved from the start. We developed our solutions with regulators. And while I understand the frustration some people express to do with the lack of clarity and the fact that regulation is a bit slow to come, I also understand where regulators are coming from. As I said, it's for a regulator to look at an industry that's growing quickly and that a lot of people are interested in, but there are still 90% potentially manipulated volume. That's a big red flag. So I think the solutions to that are, first of all, better tools that address the specific challenges that crypto presents from a compliance and risk monitoring perspective. We can talk about that a little. And also, the industry working with regulators. We're involved in various industry associations, with the market integrity chairs of Global Digital Finance. We're members of the Chamber of Digital Commerce. And all of these organizations are doing great work with regulators to pave the path towards tailored regulation.
And what makes market surveillance so critical in the crypto space?
Well, that's I can talk about that for 5 hours, but I'll make it quick because I think we're starting to get towards the end of time here. The bottom line is that digital assets are fundamentally different. It's not reinventing the wheel. There are a lot of similarities, but there are also a lot of differences, small and big, that cause a lot of that make it very expensive to try and either build your own systems or use traditional surveillance and risk monitoring systems from securities to monitor this space. Our solutions are crypto native. They utilize advanced technology like machine learning and are specifically designed to address a lot of these challenges, like the new data structures of crypto, the new market structures, and the very quickly evolving regulation, and also the fact that it's a nascent industry, meaning there's a lot we don't know, and we need systems that are able to adapt and evolve.
Terrific, and obviously competition just validates that there's a demand for your product. So what is making you different from your competitors?
So we are the only market surveillance and risk monitoring solution that was designed specifically for crypto, understanding that this space would need tailored solutions. In that sense, we're the only ones who truly understand this. This is in our DNA. It's not another revenue, not another revenue stream. We're very focused on helping companies cost efficiently monitor for risk, apply for licenses, and in the process, help the industry grow.
Terrific. Well, that's really informative, and I wish you all of the best during this week and forever into the future. Congratulations for being a member of the FinTech Sandbox. Well done.
Thank you, FinTech Sandbox, and the entire community.
Up next is Igor Tysynski, CEO of IntelliBonds. IntelliBonds is a technology startup focused on cost optimization and alpha generation for fixed income institutional investors through cutting-edge AI-powered cloud solutions. They are building the first AI human collaborative investment platform. Alongside Igor today is J.R. Lowry. J.R. is Chief Operating Officer of State Street Alpha, State Street's front-to-back platform for institutional and wealth managers. He is responsible for overseeing Alpha's day-to-day business operations, its people, and its business performance. Please meet Igor and J.R.
Great. So Igor, tell me more about IntelliBonds. When did you start it? What's the gap in the fixed income space that you set out to address?
Sure. Well, we started about 2 years ago, and the reasons why we started is that I was working in the fixed income industry for 15 years on the buy side. And, working in credit research and portfolio management, I realized that my tools were limited to Excel spreadsheets and VBA. And then when I was interacting with either fund managers or with traders, we ended up having multiple iterations about the trading idea or risk recommendations. And by the time we got to the execution, market moved against us, or we were just too late and it was already priced in. So I thought well, that must be a better way. So we started to build first product, which was Credit Assist. And this is effectively AI assistant that is helping credit analysts with the workflow. And those other two modules, which we are working on, is a portfolio manager and the trader. And the goal is all these guys not working in the silos using different platforms, but working in a single platform with all information being exchanged in real time. So from risk recommendations to trade idea and to trade execution, you can do it within seconds rather than within a couple of days, especially if you are a global company.
Interesting. So talk more about how your product fits into that workflow. Clearly, there was a workflow issue that was the driver behind the starting of the company. How does what you're doing fit into that workflow now?
Yeah, so I can just maybe describe my own experience and then just link it to our product. So as a credit analyst, I was building my financial models and spreadsheets. Then I was reading news on Bloomberg. Then I was looking at the pricing information from third-party providers, whether it's Market or Barclays Aggregate Index. And then I was just pulling all the data into Excel. Right now, all the data is automatically pulled into the platform for you. And depending on your investment universe, so if you are a credit analyst covering, let's say, retails and utilities, all that information is pulled into a single platform. You have the ratios, analytics, forecasts, rating predictions, pricing predictions, all is done for you. And you are sort of in a supervisory position where you just look at the output of the algorithms, and then you just say, well, either I like it and I just push it over to fund manager or a trader, or I say, I don't like it. And then you can interact with the bots in the background and change the reality, because let's be honest, bots are not perfect. But if you bring in the unique insight of people and the bots together, you end up in a situation where the outcome is very different. And normally you are much more productive and you can generate much more alpha for the employer.
Interesting. So I know you're focused in part on the insurance space. How are your algorithms able to construct portfolios for insurance clients when portfolio composition is so highly dependent on details of their business, right? Things that wouldn't necessarily be known.
Yeah, I know. I think that's where the collaborative nature of our platform comes in. So whilst our algorithms can generate rating predictions, can generate investment recommendations, we don't really know what is the liability profile of the insurance company, or we don't know whether it's a life product or P&C product, or whether they are focused on liquidity, or whether they are subject to regulations like Solvency II in Europe, for example. So what we are doing there, we're just building the pool of bonds which are likely to outperform over, let's say, next month or next quarter. And then the end user, which is either fund manager or insurance company, expresses constraints through the interactive dashboards. And you can pretty much customize it as much as you want. And at the end of the day, you're gonna get highly specific portfolio which is relevant to you. And then the moment you save that portfolio, our algorithm will keep monitoring credit risk, pricing, etc. So it's really collaborative nature of the platform that allows it, because without it, we would not be in position really to fit the needs of every insurance company or type of a product they are trying to replicate in their investments.
That's really interesting. So how's it going? How are you progressing in getting out into the market and engaging with target clients on what you can offer them?
Sure. So we have started really selling the product in August. We initiated a pilot with Vanguard, and now we have a couple smaller pilots with the family offices. Just recently, we signed up a commercial partnership with SimCorp, which is a global distribution, which is a global solutions provider for fixed income and multi-assets. So we're going to be integrating our functionality there. And yes, we are here as well, and we would love to obviously reach out to more commercial partners and sign up potentially more pilots or sell more licenses, because I think this is the excellent opportunity, I think.
Excellent. Well, that's great. Thanks for your time today. Really interesting to hear about what you're doing with IntelliBonds, and best of luck to you as you get out into the market and start doing more trials with clients and generating some business.
Thank you very much as well. Have a good day.
Gideon Taub first founded Pinkaloo because he didn't like that everyday donors, like himself, didn't have the right tools to budget for their giving, to discover great charities, and to collaborate with community members. Pinkaloo provides fintech infrastructure and consumer tools that seamlessly incorporate giving into people's lives and connects them with the causes that they care about the most. Speaking with Gideon today, Sean Belka is a managing director of corporate development at Fidelity Investments. Fidelity Investments is a leading provider of investment management, retirement planning, portfolio guidance, brokerage, benefits outsourcing, and other financial products and services to more than 20 million individuals, institutions, and financial intermediaries. Enjoy hearing more about Pinkaloo.
Hi, Gideon. I'm super excited to be here today for FinTech Sandbox Demo Day, and just wanted to jump right into it in the interest of time. So Pinkaloo's mission is to democratize philanthropy. Can you help me understand how you do that?
Yeah, hey, Sean, great to have the chance to chat here. Donor-advised funds over the last 15, 20 years have seen tremendous growth, and programs like Fidelity Charitable leading the way. And those are great tools for high net worth families to manage their giving. But there's no solution that meets the needs of everyday donors. And we define those donors as the 50% of the population that give between $100 a year and $2,500 a year. And those donors struggle with budgeting, they struggle with discovering organizations that align with their passions, keeping track of their tax receipts, and they're eager to collaborate with like-minded donors and feel connected to their communities in giving. And so our initial insight was to tailor the donor-advised fund product to meet the needs of those everyday donors so that they have a centralized place to manage all of their giving and to address all of the pain points and friction that they have in managing their philanthropy.
Oh, that sounds great. Well, can you explain how Pinkaloo works with donor-advised funds?
Yeah, definitely. So we actually work with them in two different ways today. Some donor-advised fund programs actually use our software to complement their current programs as a way to engage the next generation, for example, or as a way to offer lower minimum giving accounts that more of the population can access and take advantage of. So in that first case, as a way to generate the children or to engage with the children and grandchildren of their current fund holders, it's an awesome opportunity for them to get ahead of generational wealth transfer and to be more relevant for the future generations of their current clients. And in other cases, whether it be some of those commercial DAFs or community foundations, we're seeing that they really want to have a product that they can offer to a wider range of the population. So in those cases, we're complementing the current work that they're doing. Also, really in the last 6 to 9 months, we've started licensing parts of our platform, typically through APIs or through one-off modules, to bring more efficiency to the administration of their current programs, whether that's getting the dollars out to the charities faster, whether that's providing better search and discovery capabilities, or whether that's providing better donor portals as well. So really over the last 6 to 9 months, we've seen a lot of opportunity to partner in the donor advised fund space to bring more value to their programs and to their clients.
Wow, that's exciting. That sounds great. Maybe you could help our audience understand, like, how would a financial institution, say like a retail bank, how would they add this to their suite of services? How would they work with Fincaloo?
Our primary product is a no minimum giving account, meaning a retail banking client who might have a checking account and have a savings account, maybe a loan product with the bank, maybe a credit card, who wants to give $50, $100, couple $100 a year can enroll in that. And so we want to do that by integrating directly into digital banking, which we've done on a number of different occasions, so that this product sits right alongside those other products that the clients of the bank are already using on a day-to-day and week-to-week basis. And then have a seamless way for those retail banking clients to be able to come in, fund their giving account, search a database of every charity in the country, and make distributions from that account out to each of those organizations. And our software, in a turnkey way, funds and supports the funding and the distribution of the funds and all of the steps in between as well, which is really elegant. And one of the reasons that we're seeing a lot of interest from the retail banking community and the credit union community is that they're leveraging these charitable giving accounts to drive incentives that yield outcomes that they really care about. So maybe they offer an incentive where clients can set up direct deposit for the first time from their paycheck and get 50 charitable dollars contributed to their giving account that they can then choose where and how they want to distribute it as a way for the bank to drive more deposits. Or actually our FinTech Sandbox partner Plaid allows us to automate debit card roundups as a way to drive more interchange fees for the bank and ultimately allow those clients to fund their giving just by using their debit cards in the way that they are today. So, you know, there's obvious benefits around marketing and brand perception and net promoter score by having an awesome giving experience, but there's also the opportunity to drive other outcomes and KPIs that the banks care about that ultimately drive profits that are also really exciting and what we're seeing a lot of traction with.
Well, that's really interesting. Thanks so much, Gideon, for sharing what Fincaloo's doing. And with that, I'm going to end our session here and wish everyone well for the rest of FinTech Sandbox Demo Day.
Fantastic. Thanks, Sean.
Wow, these have been some great demos so far. I hope you've been chiming in on our Demo Day Slack too and getting to engage with the companies that have presented so far. Up next, please meet Sabrina Manville, co-founder of Edmit. Edmit helps families make smart financial decisions about college and student debt with software, financial education, and expert advising for every step of the process. With Sabrina is Catherine Van Noos. Catherine leads FinTech for the Global Startup Business Development Team at Amazon Web Services, where she's responsible for the development and execution of strategic initiatives in FinTech. AWS provides startups with a low-cost, easy-to-use infrastructure so they can build and scale their businesses on the most secure, compliant, and resilient cloud. Please welcome Sabrina and Catherine.
Thank you. Hi, Sabrina.
Hey, Catherine, how are you?
I'm doing well, thanks. So Edmit has emerged as a leader in helping families understand the costs and ROI of higher education. How have you been able to do that?
So we started the company 3 years ago. My co-founder, Nick Dukoff, and I left our jobs as university vice presidents to start the company. And we did it because we saw that families were really struggling to figure out how much they were going to pay for college and also how much they were going to get out of it. And that's so much more important in many ways than this topic of how to get in, which a lot of college discussions are focused on. College is a great investment on average, and it's one of the most important engines of mobility in America, but it doesn't turn out to be a great investment for everyone, depending on the choices they make, how much they pay, things like student debt decisions. And so we think this is actually one of the most important socioeconomic issues of today, given the student loan crisis and the domino effects on the economy. And we just thought it was unacceptable that consumers don't have access to more trustworthy and transparent advice on college finance. So we brought together a team with a pretty unique combination of experience in financial services, education data. And what we do is we translate concepts from personal finance or financial literacy and also education research and policy, and use them to help families understand how to make this college decision more wisely. We have software as well as educational content and an online course. And then we also have a network of human advisors that you can talk to at a very low cost compared to traditional college advising. So those three methods together kind of combine into an admit process that families can follow.
At the start of the first school year during COVID, how has that impacted the ROI of college, and what are the considerations for students?
It's a really interesting time and lots of change. Unfortunately, a few things have made this whole ROI calculus much more urgent. The first is that families are facing a lot of financial challenges, either reduction of income because of lost jobs or general increased uncertainty about the future. And so they need to understand, how are those changes going to impact my financial aid? Is there anything I can do to get more financial help from colleges? The answer is yes. And whether they need to shift their plans altogether. We're also seeing a lot of changes in college pricing as a result of COVID, and that could mean tuition cuts, which is obviously good for students, but it also could mean decreased availability of financial aid or scholarships. It's not clear yet, and it probably is going to depend on the college and kind of how they respond. It's a little bit like the Wild West. So we think that colleges that look similar on paper may actually have very different financial responses to this, and families need to track those closely. The last thing is that a lot of colleges are delivering their education in a different format, whether that's online or hybrid, or maybe in person changing to online, which we're seeing a lot. And so frankly, families are starting to question the value of those different experiences compared to what they signed up for and whether it's still worth it. So they have to make a different calculation about how much they're actually willing to pay. And a tool like Admit helps easily consider kind of those trade-offs and maybe consider some other more affordable paths if it turns out to not be the right one for the family right now.
So on that same theme, I think many people are also uncertain about whether the universities that their children are thinking about attending will even be financially solvent in the future, given some of the dynamics you talked about. How can Admit help?
Yeah, this is also an unfortunate challenge. And the reality is actually that the university business model has been under threat for a while for a variety of reasons, including things like demographics, state funding declines, but also just increased costs in delivering the educational experience that colleges provide. And even if universities are nonprofits, they have to make ends meet, and the vast majority of them rely on tuition revenue rather than grants or endowments. So COVID has accelerated these issues in all types of institutions because there is decreased revenue and increased costs. Decreased revenue because they may not have room and board income, or things like sports related income is at risk. Going hybrid and going online is actually really expensive, along with all the precautions that schools need to prepare for. So Admit's done a lot of research and modeling on this topic to see what financial health rating different colleges get. And so we publish those findings kind of on a per college basis so that families can see the financial strength of colleges they're considering. We also have guides and tools that help families understand what questions they should be asking as they research colleges so that they can have this as part of their calculation, because it's definitely something that's newer in the kind of consciousness, but is becoming increasingly important because we're seeing a lot of institutions at risk in the coming few years.
Great. Well, thank you so much, Sabrina, for sharing that with us. It was a pleasure to meet you.
Yes, likewise. Thanks, Catherine.
Up next is Posh, a Boston-based conversational AI platform company founded out of MIT's AI lab. Posh works with financial institutions to deploy context-aware bots to automate routine conversational processes and delight users. You'll hear from co-founder Keren Moynihan alongside of Commonwealth SVP Nick Maynard back for another discussion. I'm happy to introduce to you Posh.
Ron, Posh has some interesting beginnings. Could you tell us about your founding story?
Yeah, sure, thanks. So Posh actually came out of a research lab at MIT. So my background personally is I did my undergrad in computer science at MIT, and then I did my master's in speech and natural language processing at MIT as well in the computer science and AI lab. My co-founder, Matt, he was also in the same lab as me. So we were both actually doing our master's degrees together. I actually finished in 2017 and he finished in 2018. So there was a little bit of a gap, but we formally consider Posh as having started in the summer of 2018 once Matt graduated. And, we actually brought on a few of our friends from our research lab. And, we kind of got into conversational AI in an interesting way. So initially we were doing some consulting work because we had a background in machine learning and AI and NLP. And then we were really inspired by what, the larger banks were doing, like Bank of America and Capital One with Erica and Eno. And we recognized that there was an opportunity to bring similar technologies to mid-market. And so our focus, so far has been around community banks and credit unions, kind of the mid-market financial institution, so that we can bring technology similar to what the large banks are pioneering with AI. And that's kind of been our journey over the past couple of years.
So it's a very hot space. In the conversational AI space, there's a lot of competitors. How would you say Posh is different?
Yeah, so the first differentiator is actually some technology that we invented during our time at MIT. So we filed a patent for a novel way to handle contextual memory or conversational memory persistence in chatbots. And so one of the things that we've seen with looking at other bot platforms and general adoption of AI so far has been that most general adoption of AI has been around command-based interactions. If you're using Siri or Alexa, for example, you're more so giving it commands. In the case of what Posh is operating, and we're focused on customer service automation and member services, so our conversations are really two-way or bidirectional conversations. So it's more than just command-based interactions. So a lot of our focus has been around, how do we make those more complex use cases or bidirectional use cases more robust, especially when, for example, you're using our voice-based solution. It's not quite a chat bot where you don't necessarily have an interface, it's over the phone. So it's very important to be more robust in terms of conversation without having to rely on, necessarily just GUIs and things like that. So that's kind of our first main differentiator. But besides the fact, we've done a lot of work in providing more of a developer-focused experience to our platform. A lot of the competitors that we see, they really focus on low to no code. It's more, flowchart-driven use cases and kind of simple for business users. In our case, we integrate with a lot of systems behind the scenes. We're working with pretty legacy-heavy systems in our customers so far. So it is a pretty technically heavy implementation, and therefore, our focus has been more so on the developer angle of things as far as our conversational platform goes.
Great. There's a lot of talk also about bias within AI. How does Posh address racial and gender equity bias, especially for low to moderate income who engage with Posh's platform through their institution?
Mm-hmm. Yeah, so most of our customers tend to be mid-market FIs, so we really focus on credit unions, community banks, other community-focused institutions. So by nature, these types of institutions are more so catering to lower middle income, minority groups, community-focused groups as well. So the cool thing about credit unions, for example, is that they often have niches in the membership that they service, and so they're often servicing several underrepresented groups in the industry. And so, one of the things that we're doing at Posh is we really focus on training our models in-house. We leverage data sets that come from our customers and partners. And so the cool thing that we've been able to do is actually crowdsource a lot of conversational data sets from our customers, really focused on actual conversations that their agents have had with their members. And we use that to train our models. So our models, are combining both widely available data that you might find on the internet, along with more specific annotated data from our customers.
That's great. That training data is so important. Where does Posh see the future of banking headed? And with the adoption of AI tools, how does Posh think about the impact on employment, especially of low to moderate income workers whose jobs might be replaced by AI?
Yeah, that's a great question. So, on the first part of it, kind of the future of AI and banking, I think one thing that AI is really good at doing that, even humans can't necessarily do at scale well is personalization. So when you have an AI system, it's able to access a lot of data that's available to the AI. And so we're able to better cater conversations to individual members, and therefore there are opportunities to use AI to provide, increased financial literacy and help with personal financial management. So there's a lot of opportunities to do good with AI. And to the second part of your question, a big focus for Posh is to provide 24/7 engagement to member bases, whereas traditional banks, especially in the mid-market, they're typically operating their service channels from 8 a.m. to 6 p.m. So there's an opportunity gap for us to provide 24/7 automation and really help speed up the process or provide more valuable service for the agents with the time that they've freed up.
Great. I've enjoyed our conversation today.
All right. Thanks, Nick.
And finally, you'll meet Amy Gasper, co-founder of LionX. The LionX service seamlessly integrates with legacy financial institution software to enable consumers to choose which sensitive, personally identifiable information to share and for what length of time, reducing the opportunity for misuse or theft of personal information. With Amy today is Danielle Ferry, an innovation strategist at the Moody's Analytics Accelerator. The Moody's Analytics Accelerator fast-tracks product development by following lean innovation principles and partnering with the startup community. They are currently bringing machine learning and other advanced data analytics techniques to the process automation, commercial real estate, and compliance spaces. To bring us home, please welcome Amy and Danielle.
Amy, consumer privacy is top of mind in the regulatory space right now. Can you tell us, how does LionX address this need?
Happy to. So LionX offers privacy as a service. This is technology that businesses can use to integrate directly into their existing technology to be able to create all the different experiences that consumers need to fulfill these rights that regulations have now brought to bear. So this is everything from verifying consumers' identity when they request access to know who has their information, when their information is shared with a third party, and also the controls to dictate who gets access to which parts of their information. And we track all of this through our system so that businesses can prove that they've met these regulation requirements. And we store the personal information in a unique way that helps them prevent the leakage of that personal information as a result of a data breach. We also record all this information, like I said, for audit, and really trying to help businesses meet these regulations that give consumers security, transparency, and control over their information.
Great. And you made reference to regulations a few times. The Consumer Privacy Act and GDPR in particular have been around for a bit of time now. Can you just share with us some of the things that you have seen around those regulations and perhaps others that you think are encouraging, and also what about it is concerning you?
So what I find encouraging is that a lot of businesses are aware of these regulations, and they've started to incorporate principles of privacy by design. So one of the key principles is data minimization. So when I talk to fellow founders, they started implementing measures around using only the data they need, not holding on to all of that information, which is really, what CCPA and GDPR are about, right? Only using the data that you actually need and giving consumers transparency into how you're using that information. So a lot of other states are starting to come up with different regulations that are similar to the California Consumer Privacy Act. Hopefully, the Fed will come in and we'll have a unified set of privacy regulations, but we'll see how long that takes. California tends to lead the way, so most folks are following the California Consumer Privacy Act, being the most restrictive. And what I think is also really interesting, or what people should start to think about, is how consumers are starting to act on their own, even outside of the regulations, how they are behaving and how they trust and look at how businesses are sharing their information. So as an example, Cisco did a survey where they found that 32% of consumers are firing businesses based on their data sharing practices. So consumers are really taking a harder look, right, about how businesses are taking care of their data, and really businesses need to start doing things, obviously for regulation purposes, but really in the vein of gaining and retaining consumer trust through that transparency and control aspect of the regulations.
Yeah, it's such an interesting time. I wonder about, we think about being able to leverage financial data and also be able to protect the privacy of consumers is clearly important. Can your privacy as a service application be used to mediate between financial services marketers and their affiliates in order to address those dual needs?
Yeah, so at the heart of our platform is data sharing. And so we want to ensure that all parties, businesses who hold consumer data, consumers, as well as the partners that those businesses work with, are able to share and consume that data in a secure manner, in a way that's transparent for consumers. So with our platform, as an example, a marketer could publish an anonymized profile, if you will, on behalf of the consumer. Let the consumer give consent to that, be able to let their partners make a decision that's completely unbiased, right? If you don't have the personal information and only the verified financial information to make that offer on, you have a highly qualified lead. You're not putting yourself at risk as a partner for having that personal information, just the financial information to make that decision. And then the consumer, when they see all those different offers come back based on their financial information, then they can choose who they want to work with, who they want to give their personal information to, and perhaps it's maybe only one or two vendors that they give their information to, reducing their risk, right, of having their personal information sprayed around to different organizations without their knowledge, and giving them, again, more transparency and control over that whole process. And for the partners, they have less liability holding on to that data. We have all the information for them to access through APIs, making it seamless for them, keeping it in a secure environment. And they are no longer holding information for consumers that may not, actually go forward in that offer. So really trying to help all different parts of that data sharing process, if you will.
That's fantastic. It's certainly important to be able to help the financial institutions who are your customers, but also obviously ultimately your customers are the client, the users who want to protect their own privacy. So that's really wonderful. Thank you so much for answering these questions for us, and wish you best of luck.
Thank you, Danielle. Nice to meet you.
Big round of applause and thank you to all 7 startups and our great FinTech Sandbox partners for today's discussions. We hope you've enjoyed exploring the range of FinTech that our Sandbox startups are focused on and seeing the breadth of scope in their products. Now it's your turn. Continue the conversation with more questions for our startups and partners. Sign up for office hours and follow-up conversations with all the startups that piqued your interest here today via the Calendly links on the Slack. Today's event is really just kicking off our march towards March as we gear up and get ready for our Boston FinTech Week on March 16th to the 19th. The theme for Boston FinTech will be financial services for anyone, anywhere, anytime, which we think is especially apt in today's world. Please continue to join us for all of our live FinTech Talk events this week. Our team has worked really hard to incredible speakers, and I'm so excited for you to join us for those panels. Tomorrow we have the Collaboration Ecosystem with Mass Challenge in DCU at 12 p.m. Eastern, and an evening session called When Everything's Digital with Al Gorand and the Boston Fed at 5 p.m. On Thursday, don't miss Insurance for Everyone Anywhere with InsureFi at noon. And today's Silk Road is Digital with F Prime Capital and Flywire at 5 p.m. And finally, on Friday, we'll have a great conversation at noon on laying a foundation for the future with MassMutual and Commonwealth. So be sure to check out all of these great events and be on the lookout for more Boston FinTech Week details to come. Thanks for joining us today.